I'm going to be presenting both Uranium Energy Corp and gold mining. As you may or may not know, my name is Amir Adnani. I'm the CEO of Uranium Energy Corp and the chairman of Gold Mining Inc. We'll start with uranium energy, standard disclaimer statement, and a few slides on the key kind of macro developments right now in our sector. We really have been noticing that the supply cuts in the uranium industry have been driving the increase in the uranium price over the last year. Over the last year, the spot uranium price has increased by 35%. And when you look at the production cuts that started in 2016, production peaked in 2016 at 162 million pounds. In 2017, it fell to 154 million pounds. 2018, 2019, the projected supply is expected to be about 135 million, and demand is expected to be about 194 million. Even if we account for any secondary supplies in the market, we should be seeing a supply deficit or imbalance in 2018 and in 2019. Again, this should continue to create the sort of price pressure, the upward price pressure on uranium prices, and what we saw last year could continue into 2019. The one development that I would really be drawing your attention to right now is really the developments in the US. And this could be increasing the demand for US uranium. The developments that I'm referring to is the US government's Section 232 investigation into overdependence of uranium on foreign imports in the US. The US consumes 50 million pounds of uranium annually, and US production this year will be about 1 million pounds. So 98% of US requirements are being imported. Department of Commerce initiated an investigation into this last summer, and the investigation should have two upcoming milestones. The key dates are April or May of this year, with a report out of Department of Commerce, with a final decision expected to be made by the President this summer. Keep a close eye on that, because again, any kind of policy that comes out of that, be it quotas, be it tariffs, it could really increase demand for US uranium, and that obviously is an opportunity that our company with UEC is very well set up for. So in that context, we are very much focused on advancing our projects that could be ready for production in the US. We've made a number of really exciting acquisitions since Fukushima. Today, the company has 58 million pounds of measured and indicated uranium resources, 45 million pounds of inferred resources. We've made a number of acquisitions of hard rock projects in the US that create better leverage to the uranium price, acquisitions in Canada, and the portfolio that we have in Paraguay. And last but not least, a very unique way for our investors to get exposure to the royalty model, but in the uranium sector. We're the initial and largest shareholder of privately held Uranium Royalty Corp. This is a business that will look to do an IPO this year, and as it does, it'll be an exciting opportunity and a way to have exposure to projects across the cost curve all over the world. And for UEC, we're excited about this. That's why we're backing this company as its largest shareholder. This, combined with our US portfolio and our US production readiness, really positions UEC in a unique profile. And in the US, it really is going to come down to permits, infrastructure, and resources. I can tell you from our experience as a company, it could take 5 to 7 years to get permits in the US to mine uranium. That's the bottleneck. That really becomes the rate determining step. So for our company to have our Texas hub and spoke strategy, coupled with our Hobson processing plant, and our Reno Creek project, which I'll talk about, which has been culmination of 2 years of acquisitions and consolidations. I want to show you a little video clip. I don't know if there's any audio on this. Maybe we can crank up the audio. But I can't emphasize enough the importance of infrastructure and people with the know-how to mine uranium.
I'm Greg Crow, superintendent at UEC's Hobson facility. I've been in the uranium industry for over 35 years.
That's Greg Crow, the superintendent of our Hobson processing plant in that video. Over 35 years of uranium experience that just Greg has. And the people that we have at the facility at Hobson, our engineering department, our lab, our facility, our ability to be able to take uranium-loaded resin, process, package, and be able to sell it. This is not only unique, but it also has scarcity value. There's probably only a handful of facilities like this in the US today, and that scarcity factor will be a very important driver for UEC as the recovery in uranium continues. The method of mining that we're focused on continues to be in situ recovery as our main focus. At the Palangana mine in South Texas, we have our proof of concept with the fact that we built this mine, operated for 3.5 to 4 years. So you know at UEC you have a company that's got a demonstrated ability to build, operate, and bring in operations and production costs globally at a very competitive level. The cash cost at Palangana and Hobson when we produced and mined uranium was less than $22 per pound cash cost. And that's globally competitive. So this isn't a question of just hoping that we get some kind of trade action out of the US government investigation that I talked about earlier, but to be truly developing globally competitive projects. I'm really excited about our Burke Hollow project. This is a project that we discovered as a company in 2012, and here we are almost 7 years later. We have almost all the permits for production at this project. This year we have very aggressive development strategy at Burke Hollow where we're going to be drilling out the first production area at our project by installing the monitor well ring and preparing the project so that it could be the next project after our Palangana mine to come into production in South Texas. Production from Burke Hollow would be shipped to our Hobson processing plant. Reno Creek, we just had some news on this project recently. This is a project that today, after 2 years of our company making acquisitions, again, a great time to be making acquisitions with the sector being out of favor. We've managed to make a number of acquisitions right in the heart of the Powder River Basin in Wyoming, a very historic area for uranium mining. We now control at Reno Creek the largest, fully permitted, pre-construction ISR uranium project in the country. That kind of size and scale is really what gives us now the ability to point to Texas, where as a company we have 14 years of roots and experience in operations. And now over the last 2 years of very aggressively making these acquisitions, we have a premier and very large ranking project on the entire US scale, surrounded by some big companies like Cameco and Uranium One in an area that has mined 85 million pounds of uranium. 26 million pounds of measured and indicated resources. So again, the project has very highly qualified resources. This year, we will have a PFS underway. And so the timing vis-a-vis the possibility of increasing, growing demand for US uranium is really ideal. We couldn't have asked for this to be better set up. But again, don't forget, we've been working towards all of this for 14 years as a company. So it's definitely taken a long time to put all these key pieces together. So today, UEC is a company that has 177 million shares outstanding. We're a US company and we're listed on the NYSE American under the ticker symbol UEC. As of our latest quarterly filing, we had $24.5 million of cash on hand. All figures are in US dollars. $20 million credit facility that's managed by Sprott. That facility, the principal repayment is due in January 2022. So we've given ourselves a lot of flexibility at the balance sheet with work that we did late last year to raise equity and to restructure the facility to make sure the company was in a flexible and strong financial position. We're covered by 5 analysts that have been to the company's projects, that have visited the projects. Our last couple of equity financings were led by JP Morgan's Global Mining Fund out of London and a number of other institutional investors that have really been long-term holders of the company, including management and insiders. In summary, I would really say that 2019 has shaped up to be a bit of a possibly dream year for a company like UEC in the US with production-ready assets. It doesn't seem to me, and I'm saying this as a Canadian, and I'm not saying this whether you love Trump or hate Trump, you have to understand that support for nuclear power in the US today is a bipartisan issue. There's bipartisan support for nuclear power. In fact, some of the biggest climate organizations in the world are now supporting the role of nuclear power in a very robust way in our energy portfolio. In that context, it doesn't make sense to think that the US can continue to be importing or relying on 98% of its uranium requirements on foreign imports. Surely something could change. Surely something positive could come out of this summer's Section 232 process. And with that, the position for our company to have fully permitted projects ready to go in Texas and Wyoming, with the ability to quickly ramp up to 4 million pounds per year. Remember, total US production is 1 million pound per year. The proposed quota that the US government is considering could reserve 12.5 to 15 million pounds of the US market for US production. In that context, our company to be able to immediately grab 4 million pounds per year with the facilities we have in Texas and Wyoming, that's our goal. That is our initial goal that we're working towards, and it sets up for an exciting opportunity. We like to see the uranium price at $45 per pound, and that's a price that we can get to, even though the spot price is currently at $28 per pound. Last year, on average, US utilities paid $38 per pound, based on information that's available under the EIA reports. That's because of long-term contracts. So the jump isn't a jump from 28 to 45. It could be a jump from 38 to the 45 to $50 levels. And there should be a good catalyst-driven year for us with news at Reno Creek, with news at Burke Hollow, as we advance these two projects. And lastly and finally, with our large equity interest in Uranium Royalty, that becomes another way for our company to get exposure and create exposure for our investors to the global recovery in the uranium prices. So I'm going to quickly shift gears, and I'm going to talk to you about the other yellow metal. And this is our company, Gold Mining. Again, remember, for me as an individual, as an entrepreneur, I've been focused only as the CEO of one company, and that's Uranium Energy Corp. But as the founder and chairman of Gold Mining, I have strong belief in the recovery that we're seeing also in the gold price. Gold as an inflation hedge, and gold really as a store of value is something that I've been drawn to very strongly. Gold Mining today is a company that's Canadian and Canadian listed on the Toronto Stock Exchange under the ticker symbol GOLD, and on the OTCQX under the ticker symbol GLDLF. And we really act as a consolidator. We have been a consolidator since IPO. We have consolidated up until now 9.5 million ounces of global measured and indicated resources, 11.7 million ounces of inferred resources. Gold Mining is a debt-free company, and as of early January, the company had over $9 million of cash on hand. The company's projected developments over the next 12 months to not only maintain the project, but to meet its minimum permit and license requirements will be approximately $5 million. So the company is very well funded and positioned at a time where I feel we've had a very prolonged bear market gold environment. A lot of junior gold companies need to raise money. We're actually in a very strong cash position, and we've kept our costs quite low. Strong insider ownership. I've just recently added to my position as recently as December. Insiders in this company own over 20% of the company. I'm the largest shareholder of the company. And we continue to have an acquisition-driven strategy. And one of the reasons we have an acquisition-driven strategy is this graph here. And this graph really, for me, this is quite profound. And it's profound because when you look at the fact that the average discovery cost for an ounce of gold resource in the ground has risen from $34 per ounce to $174 per ounce, based on a report that came out late last year by S&P Global. That is profound. It's profound to think that the gold industry not only has mined out and depleted the low-hanging fruits, but due to the fact that we've had a 5-year bear market and massive underinvestment in new exploration, in new development, today the average discovery cost is $174 per ounce. And so in that environment, as an entrepreneur, I found it quite remarkable to say, instead of looking for things, instead of looking for gold, instead of taking on exploration risk, why don't we be an acquirer? This has been a wonderful window to be making acquisitions. And that's exactly what we have accomplished and executed since IPO in 2011. This is a listing of all the companies or assets that we have acquired. And all of these assets that we have acquired were previously publicly listed companies with a historic market cap. When I say historic, I'm talking about 2011, not the 1990s. So recent enough. So you can go back 7 or 8 years ago and say, what was the value, what was the market value of the assets that gold mining has accumulated? And the market value of everything that we've accumulated was over $800 million. Published analyst reports of everything that we had acquired was even higher than that. And we paid close to $80 million for these acquisitions, share-based acquisitions, so we issued shares to make these acquisitions. Today we're trading roughly at about $100 million. So you're looking at a company today that has a $100 million market value, but it's brought under one hood, one company, what used to be worth $800 million to $1 billion. What is the big difference is the gold price. These companies used to have the higher market cap at $1,500, $1,600 gold. Most of our acquisition has been made around $1,200 gold. But these companies, when they used to be individual companies, all had a different set of G&A and cost and board, all those things. You know one metric I look at these days for our company? G&A on a per gold resource basis. And we have actually one of the lowest ratios of G&A, overhead cost, on a per gold resource basis in the industry. That means the optionality value and the leverage value is greater, because as the largest shareholder of this company, I don't want to be diluted. And I want to make sure the potential leverage value that we have here on a per share basis is maximized as much as possible. So incredible synergies when you can consolidate. And guess what? It attracts noteworthy investors that like this strategy, and like this strategy that we're not exposing them to quarterly operating risk. It doesn't really pay right now to be an operating company or to be building a gold mine when gold is just hovering around 1,300. Because if you do everything right, you get a marginal reward. But geez, if you have one bad quarter, you could get a 30% haircut. And I won't name names, but you've seen a lot of operating gold companies have 1 or 2 bad quarters, and the market could be so ruthless in punishing you. So you look at our shareholder base today, besides insiders, we've attracted individual investors, we've attracted funds. We've attracted funds like the Ruffer Gold Fund in London, Extract Capital out of New York. And these are all mining, gold-focused funds that have been accumulating over the last year. But long-standing shareholders like Maren Katusa, Doug Casey and Rick Rule, the KCR-KCO fund that have been with the company since day one, Brazil Invest, one of the oldest investment houses in Brazil. We have 137 million shares out, market cap of about 120 million Canadian, 9.2 million of cash. The trading volume on the Toronto Stock Exchange is about 200,000 to 300,000 shares a day on average. It's been a bit higher recently. We've seen some increasing interest in the sector. There seems to be some improved sentiment towards gold. Our share price is up about 20% year to date, which is a good move. But nonetheless, even at a current 89 cents Canadian per share price, every acquisition that we made in 2017 was made using a $2 share price. And we have not made acquisitions at the current share price because we don't believe it's accretive. But at $2 a share, we felt it was accretive. We made 3 acquisitions in 2017. On a just measured and indicated basis, if you just look at our enterprise value divided by our total measured and indicated gold resources, it's about $7 per resource ounce. And that's just measured and indicated, not inferred, not gold equivalent. So I want to thank you for your time. We are at booth 402. Come and learn more about Uranium Energy Corp, gold mining, and really looking forward to a great conference here today and tomorrow. And thank you for your time this morning.